Well, for more on the late George H.W. Bush's economic policies, let's bring in John Tamny to the conversation. John is an editor with Real Clear Markets and Forbes magazine. Welcome back to the show.
Thank you.
So let's start with the defining economic issues during Bush's time in office.
Well, I think what's got to be said up front is that economics was never his focus, and I think it held him back in that he did raise taxes because he never understood the purpose of cutting them. That's just lowering the price of work. An economy is a collection of individuals. You want to reduce that penalty. Bush raised it at a time that the economy was slowing, and so it in many ways colored his presidency in other ways. When you fail economically in the United States, you fail in all other ways.
And so then, how would you characterize his overall approach? And since economics wasn't his main driver, how would you characterize his policies?
I would characterize them as someone who is too easily led into bad ideas. There's this myth out there that we had deficits because revenues weren't high enough. No, when you think about government debt, that's just a purchase of future income streams. So when revenues are rising, the debt becomes more attractive. So you're not going to fix it by raising taxes or raising revenues. You could argue that there was compassion in his policies, but is it compassionate to force a business to add different facilities for disabled Americans? Businesses do that on their own because it's good for business. Bush forced that regulation on at a time when the economy is slowing. Environment is something that usually results from growing economic growth. The richer a country is, the more it can focus on the environment. The Clean Air Act forced this onto businesses at a time the economy was slowing, and again, I think it hurt his presidency.
So how much of that would you say was to do with the policies he implemented versus the sort of economy that he inherited?
Well, he inherited a booming economy, and he did based on the belief in the 1980s that a government that did less, that regulated less, that taxed less, that protected the dollar, that was more open to trade, that if the government basically got out of the way, that people in the economy would naturally grow. And that was proven correct. The stock market boomed under Ronald Reagan, and the economy took great leaps forward. George H.W. Bush never quite believed in the Reagan-era measures, and I think it impacted him very negatively, such that he was led down the wrong path on taxes, led down the wrong path on regulation. He did make a good decision on trade, and that is something that had a grand impact and has had for a long time, the NAFTA agreement that he basically got started.
So let's look further into his impact on global trade and tell us a bit more about his approach to sort of navigating some of these waters with international trade partners.
Well, I think he understood being a globalist himself. He had been envoy, as mentioned, to China. He had been in the CIA. He understood the importance of trade as a way for people to specialize. But also, I think he understood, remember, his focus was foreign policy. He was a foreign policy president, not an economic. And so I think he understood, as many foreign policy types do, that the cheapest, most effective foreign policy mankind has ever conceived is trade. Because when individuals within countries are trading with one another, when they're selling to each other and also buying from one another, they have a rooting interest in the economic success of that country. They also have a reason to avoid war. If you're trading with one another, you don't want a war with one another. And so I think Bush understood that. And that was something that is one of his very positive, lasting legacies, is he set the stage for Bill Clinton to quarterback that to passage, NAFTA.
And what about Bush's relationship with Wall Street and some of the key sectors that drove the U.S. economy?
Again, my strong sense is that because his father came from Wall Street, that was his pedigree, that Bush tried to move away from it. You can point to Nicholas Brady, who is Dylan Reed, who is his Treasury Secretary, but Bush didn't have as much of a focus there, and I think that was to his detriment. I think the other thing that people too often leave out in trying to understand the Bush economy was that, remember, the lead up to the Gulf War in 1991, the mobilization began in 1990, and then the war lasted a couple of months into 1991, but this was a different time. The U.S. hadn't had a major combat experience for a while, and investors did not know what to think. Neither did business know what to think. They assumed that the result of this combat mission was going to be much worse, maybe much more drawn out. And so I think they restrained investment, that they delayed investment a lot more during this, because the expectation that it was going to have maybe a worse outcome than it did. And as a result, when you factor in the economy started to slow in 1991,
right.
is it any surprise then that Bush was judged for this economy leading into the election in 92?
And certainly, fairly or unfairly, that is the way history judges. Thank you so much. Always good to have you on. That's John Tamny, their editor at Real Clear Markets and at Forbes magazine.